Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Monday, February 10th, 2020. What we'll do is do a quick update on some of the trade ideas that I've shared recently, whether official, unofficial, and as well as some new trade ideas I've been hunting lately for, something that stands out. So what I have here is a list of eclectic. It's about, I'm looking down the line, maybe a little over 24 names, somewhere around there. Individual stocks, again, some of which I've covered recently, and I'll update any, I'll try to provide updates if there's any, significant developments or an objective level to add on, or stops or something that's changed on the trade, something we need to consider. So let's start out with UGAS. Now I posted 2 updates today on the front page. You've probably seen that. I mentioned on the first update we hadn't at that time yet hit our stop. We since did. The maximum stop. Once we hit the max stop, sometimes I'll list multiple stops. Sometimes quite often I'll just list the maximum stop, and that is based on the maximum price target. In other words, you should use attractive risk-reward ratios if you're only targeting, or we're only targeting, or still are that first target. You ideally want to use a tighter stop. So that was hit today on the gap down. Natural gas futures opened down last night, and so we gapped down today. And as I mentioned in the update previously, in the follow-up, we hit our maximum stop, which I had set at 38.80. You got to pick somewhere, and so far it's a stop raid. We'll see what happens, but I mentioned if you're giving it a little more room, everything on the site, be it the trade ideas themselves or the price targets that I look at, or the suggested stops or the suggested position size adjustments, are just that. They're suggestions. So on this one, we were taken out for a total loss of 15.2 on UGAS. But remember, UGAS is 300% leveraged, and it's 300% leverage of one of the most volatile commodities out there. So the position size adjustment was 0.25 to 0.35. If you're not sure, if you're new to the site, what I'm talking about, when I list an official trade idea, I'm always going to give you specific price targets. We used UGAS as a proxy here. Keep in mind I don't use futures. I'll share those. I like to trade futures, but I know a lot of traders don't have access. So official trade ideas are always on individual stocks or ETFs, not futures, not options. I do trade futures often. I'm not a big fan of options, but there's many that use the trade ideas on the site to help then determine how to trade, where to take profits, where to enter options trades, and that's fine too. I just that's not my forte, so I can't really give you suggestions on what contracts to use, how far out to go, and stuff like that. But I wanted to say that that one was that final stop was hit, and what I was getting at here, as far as the suggested position size, when you're on the site and you see these little dotted lines, see under T1, if you hover there, there's a pop-up. That's called a tooltip on any website. And a tooltip is where a pop-up gives you information. So T1 means first price target. You see I go over here to T2, second price target. And then if you see down here where I give you the trade parameters on that trade, where is it? Let me find it. Oh, had to go to the original post. So here was the original setup on UGAS, and that's where all the parameters of the trade can be found. And again, if you come in and you hadn't been in the site for a while, you're new to the site, and you see an update on the trade, and you're wondering, well, where was that entered? What price? When was the best time to enter? Where is the best time? What kind of other considerations should be made on the trade? That's what I'll list if there's any other considerations to make. And then you can see down here it says the suggested beta adjusted position size, and you see the pop-up that comes down just below it down here when I hover, and that just says reducing or increasing your above your typical position size based on the expected volatility of the trade. And then if you go into the FAQ page, which you can access by going right here to resources, that brings you into the right side of the chart support center, and there we have FAQ right here, frequently asked questions. You go to that, and you can see it's running slow because I'm logged in as admin. It runs slower there. Trading related questions, ETF questions, things like that. So under trading related questions, you'll see what is beta adjusted position size, and I explain all about it. And it's that simple. It's just basically if you're trading something that you have a potential to make 20, 30, 50, 100% or more, you need to give it also more room on your stops. Those are aggressive trades, and the way to navigate around that and take a trade like that, I wanted to again hit on this, where you can tolerate and stomach a, what did I say, 15% loss. It's not truly a 15, or not, you're not losing the same amount of money in dollar terms is you would on a regular trade, if you take that position size down to, let's say, a quarter, as I said, then your comparable loss is about 3.8%. And it works both ways too. So you might say, well, it's not worth it if I'm going to take such a small position. Had we hit our target, right here, if we entered at 45.73, had we hit that final target, we would have made 40, almost 45% on it. So again, that's a 3-to-1 risk-reward ratio. In other words, 15% total downside to 45% upside profit potential. But when you factor that in again, your profit potential, you would have made a quarter to a third of that in dollar terms, and that's still a very nice trade. And that's what I talk about beta adjusted position size. So quick update on the trade. As I said this morning, even before the stop was hit, nothing's really changed. We still have the positive divergences that were in place here at the low, and we took that. We had a bullish falling wedge pattern. It broke out, kind of traded sideways for a while, just could never get above. Back here last week, I mentioned that 1477, 1480 level needed to pop, couldn't do it. So we went down, took another leg down, extend the divergence. That doesn't guarantee a trend reversal, but the more we fall, the more oversold natural gas becomes, the greater the chance for at least a short covering snapback rally. And possibly a major trend reversal. So if you gave it room, that's up to you. And so far we're back above that suggested stop. And I still think the trade looks okay, but I'm not as good as it did here on this breakout. I didn't like the fact that it broke out and couldn't follow through, and we took this other leg down. So as I said this morning, I think it's best to wait to see some kind of solid bullish reversal, some big volume coming in here, green bars, ideally maybe some bullish engulfing candles or other bullish candlestick reversal patterns on the 60-minute, even better on the daily time frame. And then you still need to clear that 47.78ish level, which, as I told you, if you trade NG, the comparable levels there are, if I can find it here for you, I've got a chart of NG right there. See, there's your divergence still very much in place, zooming a little tighter. And the comparable level on NG, we really need to pop about 189, 190 with conviction to run. So we'll leave it there. I'll provide updates if I see anything interesting. And of course, if you're a subscriber and you want an update, particularly in the trading room gold member, just drop me a line. I'll give you charts and update, but it's no longer an official trade. So on the front page, please keep the comment section related to the topic on the post above for any updates. And then if you want updates or chart opinions on anything that's not covered on the home page, then please post those in the trading room. Okay, and talking about the trading room, the last couple days I posted a few new unofficial trade ideas. They are unofficial because the speculative nature, these are penny stocks. So if you click on the swing trading group, that's one way to find them. Other way, when you're in the trading room, click on either my Gravatar, that little picture there, or my username, or anybody else you follow. It'll show you what they're posting. So the one that I mentioned today goes back to Friday. Post this setup on TLGT. This is a small little penny stock, and you can see on Friday here was a setup right here. Somewhere, I guess that wasn't my original setup. Nope, sure wasn't. Let me find it for you. You can go like this. Type in TGLT. It's going to call up all posts related to that, including trading room posts on TGLT. Type the symbol wrong, TLGT. Okay, got a little symbol dyslexia going there. TLGT, and that should load. And we'll see. Again, I'm running a little slow here right now, logged in as admin. But TLGT, this was the setup right here, February 7th. So you can click on anywhere on that, and it'll bring that to you. And I want to show you the chart and the setup and do an update on this trade for those that took it. So there it is, a very aggressive speculative trade set up with a long entry on TLGT. Didn't come on a solid break and or close above the 48 to 50-ish resistance level. 48 was the number, that where resistance was at. So I mentioned on Friday we went on to break out, and that was those follow-up posts that I was showing you. And I mentioned taking a starter position, then going home to the weekend, said I'd add if it built on it. You can see that was Friday's candle right there. So we did take out that 48 level. We traded as high as 50 on Friday, and then today we followed up, and it wasn't a runaway trade. There was plenty of opportunity. You can see this is a 1-minute chart showing you right here. That was Friday's trading right there, and then we opened here, and we've steadily moved higher all day, up another 14% today. It gives us, I think, about an 18% thing. I did an update today. I had a target here And I'm following up because I think there's probably more upside on this one, if and I'll explain why in a second. But I had that original line at 57, and then I posted an update today when we were at 56. And I'm going to revise that level down a penny, and I did that, as I said in there, because I can see that's sometimes when I'll look at these charts initially, I'll put a setup, especially if it's unofficial. I'll just eyeball the levels, and then I'll sharpen my pencil later, which I did. So that's where all the reactions, these candle bodies here, bodies and wicks here, shadows, and the shadows here, that's the level. And so we had a momentum fueled overshoot. We hit that first target. I forget, total about 18% gain or whatever in less than one trading session. That's a nice trade. But again, small speculative penny stock. What I said on that, Vegas money only. And if you're not an aggressive trader, pass on it. If you don't know the risk involved with penny stocks, you can wake up and see this thing down to 20 cents or whatever if they file bankruptcy. I don't know their business model. It tells me here they're a drug manufacturer in the specialty and generic arena. But I do think a little consolidation here. Again, a little momentum fueled overshoot, and I favor more upside, and these are the additional potential targets there. So there's more room to run, but what we need to do now, it's healthy to see some consolidation around a resistance level like that, or at least perfectly normal. If we busted through it and kept going, fine. Sometimes you do that. So I'm favoring more upside here, and the next target would be about 68 cents. And, you're not really a math person, then think of it this way. A penny stock, although there's a lot more risk, think of it like a $56 stock going to $68 or $82 or $104. That's the way you might want to look at it if you're trying to see, oh, Randy, that's only 12 cents. Why am I going to jump in a stock to make 12 cents? Well, again, that's actually a pretty healthy gain if it gets there. Again, it's already made over 18% or so since the breakout on Friday. That's about another 20% to that next target. And again, speculative. I'm just throwing out trade ideas. Take the ones you like, pass on the ones that don't if it's not in your wheelhouse. Another one that I shared in the trading room today is CNAT. This is a biotech stock. These little guys can run. The level to me was really 45 on CNAT right here. When I say the level, what I see is an uptrend line here, and then this price resistance level about 45, which is capped most but not all advances for a while. So this stock seems to be basing here. Biotechs are quirky. You have the fact that if they have drugs in clinical trials, like many do, at various levels, sometimes even on the market, you can get negative results that come out of the blue, patient trials not going so well, or positive results, and these guys can gap. And this one on top of that. So biotech stocks, number one, especially your smaller companies, are very aggressive, and again, there's almost no way to mitigate around that risk of a big gap. I've seen these things gap up and down 50% or more in a day, so you have to know what you're trading. And again, Vegas money. Add to that, this is a penny stock trading at 48 cents, so that alone says high risk. Don't take a stock like this if you are not okay with waking up one morning and hearing that the company filed for Chapter 11 bankruptcy protection and you've lost almost all your money. That's why I say Vegas money. But why do I bother with them? Well, the potential is there for big returns. 45 seemed to be the level. What you see here is a false breakout. Remember, daily candles, you had a little pop above 45, but not impulsively. This one looked like the real deal, big green candle, but it fell back down. But now it's coming back up. So sometimes I've noticed this, that stocks will have a false breakout, kind of clear a lot of stops, burn a lot of traders, but then they'll go on if the pattern still looks constructive, to break out. Right now it's over 45 and has been trading most of the day, about 48. I think what will do the trick is a pop over 49, today's highs. That should open the door, especially if it can get up there. What you want to see is volume. Volume looks pretty good today. So far we're on volume of the volume's decent here at 1.4 million shares. Remember, it's a small company, so that's not a lot. It's still a thinly traded stock, relatively speaking. So I just want to make mention. And as you can see, target up here, it's really about 70 cents or so. These are unofficial trades, so if you're targeting 69 or 70, you might want to sell at 67, 68, step in before the herd in case it reverses. But a lot of potential. So let's just say if it breaks 49, that should run. You want to see, again, the higher the volume, the better. about 38, 39% up to that level, and if it can clear that level, there's resistance there. Next stop would be, I'll give you an additional target here, about 106 and then 137. Let me put the line at 106. So there it is. It's what I call a gunslinger trade. If you're a speculative, aggressive trader, or again, I like to chisel a little part of my portfolio out for that and call it my Vegas or play money. And with these penny stocks, you take a lot. You take, a dozen trades. If 11 don't pan out and only one does, and you get, 300-400% returns, a lot of these trades can do that, then it tends to pay off. So that's CNAT. Let me give you some more conventional trade ideas now. Let's do an update on USO. I'm going to loop back to our official trades. USO is hanging in there right now. May clip that stop. If it does, let it go. So far, we haven't seen really that washout move on the daily chart. But remember, this one I've set for the stops on a daily close below 1037, I'm sorry. And I do that because quite often, as I talked about in USO, you see these washout moves, a final capitulation, and you get those long candlestick shadows like that, and only to see the stock reverse that day and recover most of the losses before the close. Not all of them, but a lot of them. And we haven't really seen what appears to be that washout capitulation move. And when it comes, you usually get, again, a big slide intraday. The weak-handed longs just puke up the last of their shares, meaning they throw in the towel. Then you get a reversal. And look, so the stop on the daily close above that level doesn't mean that we won't have a stop rate if crude does dip down and reverse. Again, that's just where I chose to put that stop. And again, you might choose something different, but this one's still an active trade for now. I still like it, but I don't love it. So let me just say that. If you haven't taken it, or you took a little and you're thinking about adding, best to wait to see that reversal, in my opinion. Some big green bullish candle or some type of evidence that we've seen a final washout move in crude. Otherwise, the trend remains down for now. Another active trade on the site right now, which I still like, is PBYI. Again, I just gave you a whole dissertation on the aggressive nature and risk involved in trading biotech stocks. Again, if you click on the symbol tag, like where we were before, you go back to any post that you're at. Again, if you want to catch up and see the previous notes, go down to the bottom of the post, whatever the post is on, and you'll see these tags here. These are hyperlinks, and now what you do is if you click on that, it will then load all posts related to that particular security in order. So if you're looking at UGAS, you want to see, okay, where did you enter that trade? You scroll down here and right there, natural gas trade idea. I usually try to label it like that. Trade idea, that's the initial post, give you the trade parameters and then the updates along the way up until today when we were stopped out. And now that means that trade has been moved into the completed trade category. It's no longer an active trade. And so you can do the same thing on PBYI, for example, if you wanted to see the parameters. I forget where we entered, somewhere in here. We hit that first target right here. T1 was already hit. And so to me, it still looks to be potentially bull flagging. I don't want to see it flag much longer. Symmetry starts to get a little out of whack, but it's intact for now. What I mean by that, I know I'm talking fast. A bull flag pattern is a consolidation or continuation pattern. It's a continuation pattern formed by an area of consolidation where the stock pulls back slightly on diminished volume. You have a flagpole, which is a very impulsive, nearly straight up move. That's your flagpole. That's on high volume. That's what you want to see. And then you want to see, I don't know if you can make it out on YouTube, but you can pull it on your own chart. I have my volume bars really toned down in color. I don't like busy charts, but you want to see the flagging action occur on diminished volume. And then what you look for is a breakout, ideally an impulsive breakout, and you take the length of the flagpole, add it to the lowest part of the flag, and that'll give your measured target. And that's going to take us, if it happens, plays out that way. Quite often it does, but not always. But that would take us up to that second target there, about 1955. And I like the fact that not only are we flagging, I mean, that's just a potential pattern. It doesn't trigger a long entry until you get the breakout. But what I like about it right now is it's also pulled back to support, so I can make a case. I already have enough in this. I'm still holding a position, holding out for T2. But again, what I do doesn't necessarily need to be what you do. but you want to ideally see a pulsive breakout above there. And what I was getting at is I can make a case for an objective long entry because we pulled back to that former first target. T1 was at 1235, but the actual resistance level was at 1239, and we're at 1245 right now. Remember, on my official trades, when it says T1 equals or T2, I usually set the actual target just below, or the price target just below the actual resistance level. That way, in case the sellers step in early. So what happened with PBYI, we had such upside momentum. This is what I call momentum fueled overshoot. We overshot the resistance level that I expected a reaction on, and we pulled back to it. So that's technically, there's the reaction. If we reverse here, let's see, we could drop through there. If we do, 1091 is still support, and a very good support. So, unless this trade moves much below that, I still like it. Ideal scenario, again, optimal scenario would be to see this bull flag break out, to see the 12, that 1240-ish support hold, and then also to start seeing it moving up impulsively on increasing volume, and that could open the door up for a move to that 1955 level. Again, high risk but high return. They go hand in hand, and that if that target is hit, you're talking about another 58% or so from where we're at now, in addition to the, 30-something percent we already made on the first target there for anybody that took profits. And on that one, I can't even recall. I know I have a position. I might have taken partial profits on there. I have over a dozen different accounts that I'll trade in, and I have one primary active trading account, and then IRAs, family accounts, and all things like that. I'll sometimes hold a core position or a swing position for a few weeks. Let's move on to the next one, because I think I have another biotech for. No, I covered CNAT. That was a biotech as well. Yes, I just covered that. I think that is it on the biotech arena. Let's look at a few others that stand out today. Let's look at, we could cover the lithium stocks, but there's so many there. Let me just rifle through these real quick. I've done multiple videos covering the sector. Going back a few months now is one of my favorite sectors. Quite a few bullish stocks and quite a few up today. And let me just highlight a few of those for you real quick. Okay, I'm going through the flagged items in my watch list, so I believe these were the ones that I covered in most of the recent videos. I might have changed a few, added a few to some of the other ones, but LITV, the V is Canadian Venture Exchange. This is a small, penny stock there, but it's moving up nice, coming up to that first target resistance, about 9 cents, and you can see additional targets there. So it's starting to catch up with the rest of the group. LAC, this is one that was highlighted. All these were back last fall here, somewhere around when the sector was bottoming. Big returns, and there's still momentum in the sector is why I'm updating that right now. And I also want to say a lot are hitting resistance today. This one's up a good 68% or so in the last few months, but it just ran into that $5 target, and that is a significant resistance level. So on this one, this is a good time to either take profits or tighten up stops, because what I see is a pretty solid resistance level after a strong run. Yes, there is still momentum in the sector, but I do this update to also these updates to show you, hey, prudent time to either book some profits or tighten up stops somewhere. You have to, if you want to try to capture the big trend, you need wide stops. If you're actively trading, you can use more aggressive stops below the nearby support levels. There's a couple more running today. LIACF, American Lithium, continues a run, and you can see these stocks are, again, they were highlighted back here as bottoming plays, strong divergences. This one alone since the breakout here has run now about 250%. So again, risk and return go hand in hand. This is a penny stock. Do you put a lot into it? No. But do you need to put a lot into it to make a decent return, at 250%? No, you don't need much. And so, like I said back then in the videos, I like to take a shotgun approach when a lot of these stocks, individual higher risk, stocks stand out. They look attractive, but I know there's a lot of risk, so I don't put all my money into one. I just spread it around in what I call a shotgun approach. Take a half dozen, a dozen, however many you can manage. Especially nowadays with a lot of the zero commission brokers, it's feasible. If you don't even have a very large portfolio size, you can throw a few $100 in each of these names and spread it around. And if you average 100% return on the sector, which probably have so far, then you're doing well. So that's I wanted to point out, this looks there's a flag or a flag pole, an impulsive leg up, flagging type action there, and it's just broken out. So as much as this is run, you might think, gosh, Randy, that's crazy, 200, and since the very low right there, that washout move, and just a few months ago, you're talking 337%. But this one could continue on up here to that max target I have, about 37, and that'd be a 500% return. Again, penny stocks are going to do that. You're not going to have Apple run up 500% in 3 months, but these guys can do it. They can go the other way too and turn on a dime, so that's what stops are for. And strategically, when you're swing or trend trading something like this, you look for these clusters, where you have these reactions on the support and resistance levels. And on a pullback, that should be contained, if not the next level. So your stops could be set strategically or tactically just below those levels, and that can often keep you in the trend and let you ride out the pullbacks along the way and capture those big gains like that. So I won't go over each and every one. Just had a price alert go off here on CNAT. Let me get to that in a second. I just covered it, but a price alert just triggered. LTUM, just want to mention again, movement in the sector. This one's up 20% today. And let's go to CNAT, because as I was talking to you there a second ago, it popped 50 cents. So let's see. Again, thinly traded stock. I already covered what you need to, pretty much what you need to know about it. So looks good to me right now, and it'll look even better today if it can close solidly above that level, and then even better yet again when it takes out that high from that other false breakout the other day. It'll look really good and greatly increase the odds we're going to have a backfill. This is what I'm looking at here. It's a big old gap right here. And not only a gap to be backfilled, gaps once entered are usually backfilled from above or below, and you also had this kind of basing pattern or this ascending triangle pattern down here, and now we popped above it for the second time. And it's usually that second breakout. You get a false one, that second one, if it holds, especially towards the end of the day and on a closing basis, that's usually the one that's going to stick. One of the sectors that stands out to me, there's not a lot of pure plays in this sector. What I mean by that, and this is a uranium sector, a lot of the stocks in the uranium ETF, there's a ETF for uranium stocks, URA. You can always trade that one. Here's what the chart looks like. There's a downtrend line forming there. It's in a downtrend, make no mistakes about it. A lot of my trades are topping and bottoming plays, if you haven't noticed that by now. Not all of them, but a lot of them are. So here's one I'm looking at, and again, you can go with this one. You can go to their website, they'll show you the holdings. And the problem about it, a lot of the companies, if they are, a lot of the uranium pure plays, if they are publicly traded, most of them are outside the U.S. and they might not have shares listed on the U.S. exchanges to trade, because that's where a lot of the uranium production comes from. There are a few pure plays. Let's look at one, CCJ, or close to a pure play, Cameco Corp, potential divergent low here, but there's a nice downtrend line to watch, and so I'm seeing a sector that's setting up. It's not actionable right now. I want to make that clear. Some trade ideas I cover are actionable and timely. You can get in. Others are potential setups. And so what I mean by that is, this hasn't broken out yet. There's a downtrend line we need to take out to trigger bicycle. This thing could work its way down, maybe, increase the divergences, set up in a falling wedge, something like that. Or it could break out, tomorrow. And if it does, first target there is just below 10. Next target around 11, 11.14 or so. UEC is another uranium company right there, and I have dual downtrend lines, so you guys have probably heard me use the term the BOD, or benefit of the doubt trend line. So what I see is a bullish falling wedge that just broke out of, and it's back testing. The breakout was not impulsive, but then I can also draw a little minor downtrend line right there, and so that's the one that needs to be taken out. And ideally too, like I like to say, birds of a feather flock together. So when you're trading, if you were trading UEC, you can keep an eye on some of the other uranium stocks. Keep an eye on that uranium ETF I just showed you, URA. You want to see the sector moving as well, because if UEC breaks out and the rest of the uranium stocks are all falling at the time, guess what? That breakout will probably fail. So if it sticks, this is low priced, another penny stock. Don't usually share this many penny stock trade ideas, especially on the front page. I try to stick to the higher quality, swing trades, more mainstream liquid things, ETFs and larger companies. But this is what's standing out to me. So I'm passing it along. And again, do your own due diligence. And if you're not comfortable with these, pass on them. Here's another one, URPTF, uranium part. I don't know what that is. That part C company. Downtrend line to watch, and that's a common theme. UUU, same thing. Bullish divergence. See the positive divergence down here. It's in a downtrend. It's been working its way up. It's a low price stock, but it's it's $1.62 a share. Ran up off this divergent low right into that 178 resistance level. So it needs to pop that level to open the door for a move up to any of these additional targets here. Let me move that line a little higher, about 208, and then don't call it $2, 250, somewhere in there. Again, if we start to get some traction. So I'll try to update those, and if I forget to, sometimes these things fall off my radar. Feel free to bump me on them. I'll do an update. MAC, this is a REIT, and that setting up your nice clean downtrend line here. Bullish divergence, no buy signal yet. Needs to pop that downtrend line. First target, depends where it breaks out. If it breaks out too close to it, then you might want to just consider that the first resistance level, maybe add a position there. If it goes down lower here and then breaks out above the downtrend line, that might be a nice run up to about 27.50. As a REIT, it probably pays a dividend here, showing me a 12.4% dividend yield. It might be cut off. Just, you might want to verify that on Yahoo, whatever. So that's what I like. Sometimes I'll add these as in the growth and income trade category. Those are stocks with that are expected to give both capital appreciation as well as pay a nice dividend. And you can see after that we have downtrend line resistance here, and then target up here to about $34 would be a target, and possibly more if that starts to pan out. So we'll keep an eye on this one. I believe I've set a price alert, and if I didn't do it, I'm going to do that now. I think I have an alert already set for that one to pop that trend line. All right, a couple more and we'll wrap it up. Here's one that I had kind of watching it for a short setup, but as you probably have noticed, short trades are almost MIA on the site lately because the market is so strong that just about everything has been going up. The market, every little pullback gets bought. We get minor sell signals, and we're waiting for the bigger sell signals. And every time the market indexes pull back to those levels, they defend it. So that's what's the story lately. However, this one broke down, and what I'm sharing it as is not a short trade. It's too late to short it, but it's at what would have been my first target. I didn't take it. I didn't pass it along in advance, but I can tell you it's at the 110.21-ish support right there. Decent support, and probably get a bounce even if it's going lower. So I'm just passing along as a quick trade idea. Not my favorite, and I tell you, I'm not even taking this one, but I'm sharing trade ideas if you're interested. And set a stop below today's low right there, whatever that was. Check out today's low and try to trade up for a test of the bottom of that gap right there. See, there's a gap. We gapped down 2 days ago, or on Friday we gapped down. That would be my target. So bounce target off resistance, or you could ride it if you think it's going higher, but that would be a decent pop from about 110.57 to 117.57. That's a little less than 7%, 6% or so, not bad. And again, then you'd want to use, if you're targeting 6%, use about a 2% stop loss, or just under today's lows, because if that breaks with conviction, there's not a lot of support till about 99 or so down here. That'd be the first decent support level that comes in on that one. All right, a couple more. Oh, Lyft. I noticed Lyft broke out. Oh gosh, it's already moved quite a bit since I put it on my list earlier today. Lyft had a pretty nice level here, and I wish I would have gotten or noticed this before today. That 49.50-ish level right here stock has been basing under that level. Tried to pop it a couple times last week, but today did it with conviction. Gapped up above it, didn't look back. Too late to chase at this point because it's already effectively hit my first target there. It would have been 40 unadjusted 54.12. That's the actual resistance level, so we came very close. Again, why I always set my sell limit orders below. Again, I didn't have this one, but had I would have, then I would have been taking profits a little below there. But I want to say this: it's a nice breakout, and this one could have more as long as the market keeps going, and that's a big if. But if it continues up through here, breaks above that level with conviction, it may want to make a run at these all the way up here to about that $67 level in the coming weeks or so. So one to watch. Or the other idea, guys, and I'd actually prefer this, would be see it come and back test that level, close to 49.50 or so, go in there with a stop just below it. Otherwise, if it takes that out, it's probably going to come in back here to the downtrend line, and then that's another objective entry if it gets there. So trade that one as you like. HBI, it looks like I have on the list. Let's see what that one is. Haynes brand, just a big symmetrical triangle pattern. The way these things work, they're indecision patterns. It's like a coiled spring building energy. I'm going to break one way or the other, we had a little whipsaw there. This market is full of those lately, but if you've seen impulsive break to the downside, that'll probably determine the next trend. Impulsive break to the upside could and should do the same thing. Another one that reminds me of that is AAL, same thing, symmetrical triangle pattern. I'd probably be more apt to go with this one than HBI, but again, sometimes the ones your favorites don't pan out, and the ones that are just okay do, and that's why I like to spread it around. Don't put all your eggs in one basket. Take a diversified portfolio, have a dozen or more positions if you can manage that. You're going to have some that win, and the winners should be a multiple of what your losers are. In other words, don't risk $1 to make $1. Risk $1 to make 3 or more, and over time you'll do well. So there's AAL. Symmetrical triangle pattern, a little bit of resistance there, about 30.16. You have a reaction high too to contend with there. So these would be your upside targets if you get an upside breakout up to about 34.90 right there. And a quick update on the Riot. This is an official active trade still. We hit our first target here. Quickly, the T1 was 150. I think that's where we went in. I know it was hit, and I marked it there. But it's been consolidating between that 130 support level and the 150-ish resistance level since. And as long as Bitcoin holds up, Bitcoin hit our first target, so I closed that official trade out. But I mentioned I still have some of these proxy trades on, like this one, and that's still our second target. And depending on what Bitcoin does, I may extend it and add a potential, or make that potential third target an official target. GBTC, you remember it hit our, our third and final target right there, which is and still is resistance. You can see it here on the daily chart. Right there is about 1222. It's pretty significant resistance, and I had the order to cover or to sell that one a little bit below that level because I didn't want to risk running up and reversing just shy like we did right here. You can see we reversed just shy, but we effectively hit that level today, and so we still have Bitcoin at resistance. So I think it works like this: if Bitcoin can pop that level, it may need to consolidate first, maybe not, maybe it never even makes it, but if it can pop it and run, then those proxy trades like Riot and Overstock and MoneyGram could do well. Same story on Overstock. Overstock is consolidating here just like Riot was. Riot broke out of a bullish falling wedge like Overstock here, ran up, hit our first target, has been consolidating, needs to pop above that level to run up to that next target, and the fate of this will probably be determined by what Bitcoin does here at resistance. MGI I think was down today, but same story on that one. Bullish falling wedge, breakout, ran up, kind of working, consolidating in a big choppy range right now. Okay, and I'm going to leave it here just talking about the MLP, the oil and gas midstream particular. This is a sector. Let me pull up the oil and gas midstream stocks here real quick. Okay, so to make you aware, what is a midstream company? Midstream is used to describe one of the three major stages of oil and gas industry operation. The midstream activities include processing, storing, transportation, and marketing of oil, natural gas, and natural gas liquids. Then you have upstream, which is refers to the raw crude oil and natural gas production, and then downstream, which refers to the refining of crude into gasoline, diesel, jet, and other fuels. So so these are the midstreams, and the point is they're an integral part of the processors, of oil and gas production or distribution, all that. They're in free fall. A lot of them are. Now they're not going to go away, number one, but some will. A company can be in an industry that's going to survive, but the companies aren't doing great. But I'm watching these. These are potential growth in income. These tend to be steady Eddie because they have usually high dividends. And normally now a lot of these are limited partnerships. are master partnerships, and they can come under tax law changes. Things like that can affect them. But I want to mention that most of these pay pretty decent dividends, and there's going to be a point where when the sector rebounds, it's probably going to be very sharp. So we'll have some potential growth in income trades here. I'm seeing divergence setting up, but let me make it clear. Although I love bottoming plays, there are no buy signals yet. That could come tomorrow. That could come next week, next month. I just want to mention, you can see these guys are just in free fall right now as I go down the line. I'm picking some of the uglier charts today, but I'm seeing the same story. I'm seeing some divergences set up, some potential chart patterns that look like they could pop, and so we're going to keep these on our radar, and I will let you know, and I'm going over some names now you can see. And again, it's a sector you might want to take a look at. Step in early right now, trying to catch a falling knife. You might get some fingers or your whole hand chopped off the way these guys are falling. But again, once they reverse, herd mentality changes quickly, and so I'm going to watch these guys. If I see a lot of them coming up to support or starting to turn, maybe some bullish reversal patterns, then we might step in here. And even if it's just a bear market rally, just to play a bounce in these guys, I can tell you this: you're probably talking well into the double digits. I mean, this guy should rally right up there to that trend line. That'd be about a 40% rally if it got up to that 370 horizontal resistance plus downtrend line resistance level, give or take somewhere around there. So this is what I'm watching going forward. Not actionable yet. Again, you could step in if that's your thing. I'd rather see some type of evidence of a bottom here, and we'll wrap it up here, get this out to you guys, and if there's anything interesting in the market today, I'll do a end-of-day market wrap. Otherwise, there's just not a lot that I hadn't covered already. This has been Randy Finney with Right Side of the Chart. Have a great day.